Hey everyone, and welcome to Stock Talk on November 1st. And believe it or not, it's already November, and hence it's really the season of giving where holidays come up. So hopefully you guys are enjoying some time with your family, but also by yourself. If you are, by yourself, that's perfectly normal. And, besides that, looking at the stock market's turbulent, but hopefully you're having a good time. That's really what matters. Stock market aside, it's really, yourself that really matters in the end. So we're starting off today with Apple. You can see after earnings and the results, or the reaction off of those earnings. And I think I've talked about this in the past, in which it seemed like what Wall Street's doing is it's punishing, irregardless of how great the earnings results are, it's punishing stocks due to high valuations. And we've seen that really with every single stock. And, Apple was the one that's been holding the boat afloat in the past few weeks. While the market was correcting, Apple was relatively stagnant. That's fine, but you can see Apple getting the last punishment because it is one of the last companies or major companies to report. So it's happening now, but I want to point you guys to what has happened to previous stocks, right, in the past. In previous stocks, they've gotten punished. Amazon's gotten punished. Netflix has gotten punished, right? But it's come up. It's recovered. We've seen a recovery. Apple, it's in the process of getting a hit. But this one will recover, in my opinion, as we move on forward. So let's take a look at the intraday chart of Apple, and you can see that Apple right now, we made a low of, looks like 205.16. Again, anything can happen after hours, but putting in a perspective of what's going on from the close today to around where we are right now, it's a little over 7, or to the low was over a 7% drop, but right now we're probably around 6.5% drop. Think about it. You look at price, you're like, man, this is a big drop. But if you think about the process in which Amazon was hit 7%, Apple currently hit 6.5%. It's not that much comparatively speaking. Okay, just keep that in mind. Now there are a couple of trends that I'm looking at. So we're looking at Apple intraday, but let's take a look at Apple on the major chart. Was that we were seeing getting squeezed in below the 20 period moving average, and today we did break above, right? So expectations would be high for Apple to meet expectations. So today we're obviously now down to 207, which is below the support line, but after market it can do whatever it wants. It can do whatever it wants pre-market tomorrow. We'll see where it opens and where it closes tomorrow. That's more important. But in my opinion, the markets are looking healthy. They're looking healthy because we were, every time we've gotten a hit, Amazon got hit, we recovered. Apple's getting hit. What do you think we're going to do? I think we're going to recover. And that's just been the trend. So in the past, it's, when we're starting early, when Netflix got hit, back in the day, it's a couple of weeks ago, but back in the day, it got hit, came down, but that's when the stock market started correcting. But now we're seeing, okay, you got that correction done, and then it gets pushed higher. Okay. So I think this, in my opinion, of course, presents a good possible entry areas into not necessarily Apple, not right now as it's falling, but perhaps some leveraged ETFs that, has those tech stocks in it. So that's something to keep in mind as we move forward. And that's just my opinion. That's what I'm seeing in the markets. So let's take you guys out to the broad markets or SPY on the yearly chart. Now, of course, the S&P 500 getting hit intraday as well as it's moving lower, right? It looks kind of, like a cascade move back down again. But big picture wise, we're still not below the low of the day today. That's still a positive, even though that's happening after hours. That's still a positive. And I want to point you guys to the yearly chart right now. And, regardless of what happens today, because this is volatility season, right? It's going to go up, it's going to go down, but we just need to get the major trend correct. So today, can you guys see that yesterday we formed reversal candle, but today we closed above that reversal candle, which shows we negated that and that we, markets are wanting to push higher. They're wanting to push higher. So keeping all that in mind, I think, in my opinion, dips could be bought again at this point. You know where to leverage your loss if you have a stop loss in this case, and keeping that in mind, we do have a this is a support area, a gap fill area from around 268 to 269.83. That's certainly possible as we move on forward to perhaps touch that gap, fill that gap, whatever that happens, that'll happen. But, you know, remember, now that the brunt of the earnings are away, that's another uncertainty that's being pulled out of the market. That's a positive sign if you're, you know, looking into a long position, right? And we're looking at Apple, it's going down. That's all in great. We'll check back on that actually in a moment as we move forward. But you know, Apple isn't going to pull the stock market down. You know, maybe short term, like one day, half a day. Maybe right now it's going to pull the markets down. But overall, it's not going to have such a big impact that it's going to pull everyone else down for long term at least. So just keep that in mind as we move forward. Okay. So SPY, I think it looks positive, and I think, you know, sure, we can come down to 269.47 before we have possibly another push higher, right? But the process is here that, you know, if we formed a bottom steadily, gradually, November 6th is a big date. That's midterms, right? And midterms, you can expect volatility up to midterms, including and possibly even after midterms. Keep that in mind because we can still slosh up, we can slosh back down, and then we'll have some stability. And once market finds stability, then we can possibly move higher at that point. So I want to take, so we'll be visiting Apple quite a bit moving forward today. I just want to see where we're at because this looks scary, but I'm not too worried, in my opinion, about this move. We've seen Amazon. I think let me take you guys to Facebook too, actually. Let me take you guys to Facebook really quick and look at the 5-day, 5-minute. Here's Facebook reporting earnings. Can you see this? Down, back to the resistance, lower low, and then back over the resistance, kept over the resistance, right? And now we're pretty much at the low of the day. But, you know, we're getting volatility. But the thing is, we've seen that the markets can push up to the upside. And because we've seen that potential, that's a good sign, in my opinion. So, all right. And then let's take a look at Amazon really quick. So here's Amazon earnings. Can you see what happened on Amazon earnings, right? Lower, lower. Doesn't this kind of remind you a little bit of Apple? A little bit, right? So here's lower, lower, lower. We're trying to push higher, lower, 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 and then up, 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 up. And then now, you know, the high of the day today, we pretty much, you know, recovered a portion of the, you know, a small portion, but a small portion of the loss. So it shows that we certainly have, and it's certainly possible that we can climb above, but we can short term correct a little bit before another push higher. Today was a good move. I think we just need to see some continuation moves by broad markets in the future as we move forward. And I think we will see that in the future. All right, so we've talked a lot about SPY. So you're like, Kevin, what about this red box here? So that box is still here, 248 to 251. Now, you know, if we do get that flush or capitulation flush lower, that's the area I would look for support. But that's if we see that in the future. In my opinion, that needs to happen, you know, possibly 2 midterms, possibly a little bit after. And if that doesn't occur and there's no really big catalyst for the markets to push lower, then, you know, that could be something that might be a couple weeks or a couple months later afterwards. So, but that is a big area of support that I would be, or possible area, target area I would be looking for in the long term. Okay, let's take a look at TVIX. Looking at volatility. So here, volatility, looking at this chart, can see that, you know, here's Apple reporting earnings and it's moving higher. So it's now at 47.40. But, you know, this is again after market. So placing emphasis on the yearly, you know, 1 year, 1 day chart and see what's happening, right? 3 red candles. So the question is, can we pop higher before we move lower? Of course we can, right? You know, what if we open the day tomorrow gapping higher and then during the day we push lower, right? These are red candles signaling momentum is pushed to the downside. So even if we gap higher, you can see gapped higher, push lower, right? Can you see that in the past? This candle right here, right? Move higher, close low, moved higher, push lower. That's certainly possible as we move forward. The only thing is we are still above the 20 period and the 50 period moving averages. Just keep that in mind as we move forward, but the momentum should be pushed to the downside in the long term for TVIX. Take a look at commodities, 4/CL. guys, what did we talk about for/CL in terms of crude oil futures? Well, we talked about bear flag patterns, right? So what's a bear flag pattern? Here's the pull, flag, pull, flag, pull, flag, pull. So still moving lower. And if you guys weren't in, shorting crude oil, there's your crude oil. It's continuing to move lower. It's actually looking very ugly on the 3-year weekly chart. And this is likely to push to my red line, or $62. Does this area have to hold? No, but can we expect some sort of bounce off of this level? We can, right? $62. So I think short term, there's still a little more downside for crude oil. DWT is the ticker to watch, and I've been talking about this ticker over and over again every single day. And, can you guys see how pretty much every day we've been stagnant, moving a little bit higher? This is looking good in terms of direction. Just keep in mind, correlating this with for/CL and pinpointing your targets rather precisely. Okay, so DWT, as this is inverse crude oil. When crude oil is pushing lower, DWT is pushing higher. For/NG or natural gas, this is a difficult pattern to trade. This is a line that I drew in today. Of course, this was really after the fact. I saw that there was a lower high that was being made. But the thing that I can argue both ways, bullish or bearish in this case. And when charts don't give you a clear direction, and you guys can imagine if you were trading this intraday, how difficult it was to trade. If you were trading natural gas intraday, it's very difficult unless you were, shorting at the top every single time and, identifying somehow that this was a bottom every single time, and then you bought it. But otherwise, it's a very difficult pattern to trade, and buyers are more susceptible to losing money, right, than gaining money. And the reason here is that, people have a mindset generally of, I can't lose much more than this amount. So they leave the position, and, the stress relief, right, out of that position. But buyers don't have a very good target of when I should leave a position, right? Because if you're gaining money and you're looking good, you're like, what if it goes higher? What if it goes higher? And when you have that what if scenario, that's when you get, that's when you actually possibly start losing money, because your initial hunch might have been the right hunch if you were doing technicals correctly, but if you don't follow through in your plan, that's a little more lopsided. So here, it's a hard position to trade, and it's getting wedged in between the 20 period and the lower high line. Not much you can do with this chart at this point, and that's just how it is. Let the trade come to you. Don't force a trade. For/GC, now this is a funny trend, guys. This is gold futures. I have a boxed area of support from around 1211 to 1221. And the thing is, we the whole time I've been talking about coming down to test that area, right? And we eventually tested it yesterday. I didn't take a position in gold, and today, of course, we moved up significantly. So now here's the deal with this, right? Unless you were extremely disciplined, technically based, and you had a stop loss, know where your stop loss is, you would have taken a position yesterday. But if I marked out this candle today, and just look at the 3 red candles, would you have taken a position? I'm telling you, most people would not have taken a position at the end of day yesterday because of the type of candle that was made. And that's fine and well. And, you don't have to take a position, but you can see that we came to a support line and then we bounced off of it. And that was the move for gold. And and the problem with this is, let me show you guys the problem with this. And if you didn't take a position at the end of the day, let me show you guys the 5-day, 5-minute chart. Can you guys see that, we came to the support, and this was the end of day yesterday. And by the time markets opened today, this morning, we were already, pretty significantly up. Now, the question is, would you have taken a position at that point? And for a smart trader, the answer would have been no, because we were already significantly higher. And you're like, Kevin, wait, hold on. It went higher at the end of the day. Isn't it going to the resistance? Yes, it went to the resistance after the fact, but you never know if it can come down and retest the support again, right? So the smart trader wouldn't have taken a trade, even though they looked at this, right? And the thing is, most of the profit that was being made has already been made by that point. So that's a hard one to get into. So if you weren't in the trade yesterday, hard to be in the trade today. So I guess the JNUG would have been the ticker to watch. And you guys can see, just kind of signifying what's happening is, by the time we're already up, yeah, we've already pretty much made most of the profit, right? So, sure, you could have written, but the question is, yes, you could have written it back up. Yes, but, the question here is really, if you went long on a gold position, here's the end of the day, right? Can you see how much? So if you held and bought in at any point at this point, you would have been wrong by the end of the day because you would have lost money. can you see the, the risk level that's involved by chasing this trend? Okay, so that's just something to note as we move forward. All right, let's take a look at a couple of your tickers. We'll start with Chris, taking a look at one of your tickers, and I'll just tackle your first ticker, which is Snap. And I believe that's Snapchat. So let's take a look at Snap. So here's Snapchat. Actually, let's take a look at the long-term chart. So yeah, this looks pretty good, right? We're above the 20-period moving average or the 20 EMA line. Now, this is looking good, but short-term only. For this one, you really have to identify when are you satisfied with your gains and you leave that position. This is a downtrending chart, so at some point this is going to go, this is likely to fall lower. Yes, I like the break above today, but at some point it's going to go lower. So, you have to have some sort of mindset of, got that money, I'm going to come out of that position. That's good enough for me. That's just my opinion. Right now, yes, we've established a short-term bottom, but this can be short-lived. So be careful of this one as we move forward. All right, thanks, Chris. 7-day options. What is your take on RSI divergence that took place on 10/11, then on 10/24, and finally on 10/29? So here's the deal with RSI, right? So I personally don't use RSI because RSI, now if you use it, it's great. But from what I've done and, from my analysis, I can eyeball things when things are overbought or oversold. So I don't really need RSI to tell me where we're at. For some people, if it works for you, that's great. Continue to use it. And I think that comes with time as we move forward. And one thing you got to note is indicators are fine, right? They're great. But if you have a lot of indicators, here I have volume and MACD, but if we have a lot of indicators back and forth, it's just going to clobber up your screen. And in the end, is that actually going to help you or hinder you? I think I would argue that if you have too many lines or too many indicators that you're using, it's going to hinder your performance in the end because you don't know what you're looking at and if you have so many things going on. So, keeping it simple and that's why I don't use RSI divergence. I don't look at divergence on that chart either. So, yeah, that's something to keep in mind as we move forward. Okay, thank you, 7-day options, for your comment. Jason, thank you for your comment. Addy Boy, Synthartist, K9. Let's take a look at HubSpot. So, yeah, this is a positive trend, right? As markets are recovering, we can see that stocks are getting pushed higher. This is a good trend. Just keep in mind that we do have earnings on 11/7, so November 7th, and that's a week away. So keep that in mind, but this is a solid trend. You guys can see that we kept to the 200-period moving average before moving higher. So I like it. I like it. Good job, K9. So, guys, thank you everyone for commenting. If you hit a like button, if you enjoyed this video, highly appreciate it. Highly appreciate taking your time during this month to make sure you watch these stock talks or hitting that like button or checking out the course. These, in my course, I talk about the specific indicators I use, and there's more than MACD and volume in the course that I teach, and all these trend lines and support resistance lines, and how we go about traverse the market. Of course, there's a chat group that I actively talk to almost on a daily basis. So you can imagine how busy it can get in these days. All right, guys. Thank you very much for watching this video. I'll see you guys on the weekend stock talk. Actually, before we leave, now I'm curious what's happening to Apple. So let's take a look at Apple right now. Okay, so that's not too bad. So good thing is, uncertainty, quite a bit of uncertainty is being pulled away right now. And markets, I think long-term, not long-term, but in the medium term, should look good. In the short term, of course, more volatility up ahead. All right, guys, that's it. See you guys on Sunday Stock Talk. Happy trading.